3, 2, 1. Hello, this is Dave, and welcome to Equity Story. I'm here with the Wolfie, and this is just a general share advice and not personal. And Wolf, I think I spent some time drawing some little lines for us to have a look at to understand. We're saying great, but we spoke about it's really good to see the market a bit of green. Oh my God, I feel like I'm in the desert and I've just seen some grass, Wolf. So a little bit of green.
That's a mirage.
Mirage, right? The question is it a mirage? And I think it's too early to basically say it's real yet. And what we're sort of showing you here, a little bit of an insight in looking to momentum in the markets, and we just put some channels in here. And you might say, well, Dave, why don't you sort of channel when you're looking at stocks? And we don't, because we look at support and resistance, but we're often, if looking at sort of long-term trends of the market, channeling can be reasonably helpful. And this is the Dow, Wolf, and that was a great little bounce we've had overnight. But if you look at the whole picture, and we could bounce higher, but we just need to do a lot more for us to say we're still not in this sort of downward trend, right? And of course, if we get a strong breakout down for these sort of trend lines, then possibly we are going a lot lower, down to that sort of 29,000. But so it's just too early to, unfortunately, Wolf, it's too early to get excited and go, I'm gonna buy the market, right? It's just a little bit too early. I mean, when did we get excited? I think really we've got to get back above that 3,410 level, start to swing. And then if we get up here, then we can get happy and go, oh, it's okay. The world is fine again. And most probably, Wolf, to do that, it's like he's saying, we most probably need an agreement in the Middle East. We need some sort of peace accord, right?
Yeah. Or at least the de-escalation, right? That's the first thing we need to see, and then the markets maybe will start looking a little bit more positive. But right now, still, I just don't see I don't see enough positives to arrest this market. I know there's a little bounce, but we've seen these little bounces before, right? We've got a couple of green candles before in this downtrend. So yeah, one day doesn't mean much. Dave, like you said, with the mirage, we can see it, but we got to get closer to it to see if it's real. A few more days.
And it's as I think the market's not quite believing it. I think you saw that with, the gold price did hold above that 2,000 level, right? Which I think, Wolf, is a sign that the market's still, generally speaking, on tender hooks with it.
Yeah, absolutely.
All right. Thanks for that, Wolf. So yeah, excited. Maybe a mirage. We'll find out over the next week or so. But at the moment, a little bit too early for us to get excited and say, we want to buy this market. But we did have some announcements out today, Wolfie, and we'll go through those. And first one was a little gold play called EMR.
Yep.
So I'm going to let you walk us through this, Wolfie, because I haven't had time to read through these. I've had other duties I've had to do this morning, so far away.
It's actually one of the better ones on the ASX. That gives you the fact that the costs are so low. So if you look at the costs, and I'm just going to bring out the quarterly report, the costs were $823 US, right? So I think if you convert into Australian dollars, about $1,300, which is up there with the best of them, right? With the EVNs that we've got. So really, if CMM is around the same as well, so you've got a number of stocks that I'm thinking, once NCM is gone, which is now off the boards, you've got the next sort of small ones, but at least a good production and cost-wise, like Emerald, EVNs, CMMs that you can maybe look to invest into if you're looking for a gold player. So look, very decent. I know it's probably higher risk because it's in Cambodia, and from that point of fact, of course, it's always going to be higher risk than being here in Australia, but still good. I don't mind the story at all. And if you're going to be playing, put it on your watch list.
All right, thanks for that, Wolf. The next one is SXE. So this is a pretty good dividend payer, Wolf, a story that's been having, great contract wins consistently, hasn't it, over the last sort of 2 years? So what do you make of the story at the moment?
Look, my most sort of, I suppose, straight away where I go when I come up with these presentations or the AGM, I just go straight to the outlook. I want to just see exactly where they are 3 months into their financial year, right? That's my go-to page. So if you go to that page, it basically says, look, it's going to be a fairly similar year to last year, right? So there's not going to be much growth from it looks like, but they're saying that growth is going to restart again in FY25. So I'm okay with that because still it's a dividend player, right? At the end of the day. So if you're going to be looking at SEE or SXE as the code, you should be fairly comfortable as long as it holds the trend lines. You should be fairly comfortable holding on to this because it's in a decent, even so it's a contract that it's in a decent space, and that is the, electrification and so on. So the sector is good. I think if you're going to be looking for a small, higher risk dividend payer, not bad.
All right. Next one is TWE, a big acquisition, Wolfie, $1 billion, right? And they're expanding, obviously, really looking strongly to expand into USA. Do you sort of applaud that from them?
Look, they are too reliant on Penfolds. I mean, just simple as that, right? They're just too reliant on Penfolds, which is obviously the premium brand they've got, and they love the premium side of things because that's where they make the most money, right? The costs are probably exactly the same, but because it's got a name, everyone pays like bloody ridiculous $100 per bottle. Ridiculous, right? But anyway, that's what people with money do. They pay for the name, perception that it's actually brilliant wine. Yeah, it's good, but taste is subjective. Saying that, they're going to do this premium side of things, and they're buying something called premium in the US, which I think they're calling it between a 20 and $40 premium range. So again, they are going down the path. They want to classify themselves as a premium brand wine, where they can get more margins out of things. I mean, that's what it is. So yes, good move. I think time will tell whether that's going to hold up, as the brands or as the strategy that they want to go to. I understand. Do you want to be hanging around the bottom wines where the margins are very, very small. So I understand that, and I like that from the fact that TW wants to classify themselves as the go-to brand if you're going to go to a top restaurant. So I'm liking the strategy, but like I said, I just want to see how that actually works over time. So I'm always a little bit scared when they come up with big acquisitions like $1 billion plus.
BRI came out with their presentation, Wolf, and I suppose the important thing here is it's the outlook, and exactly. It hasn't changed from really what they were talking about a week ago or 2 weeks ago. It's pretty.
The problematic thing for me is the words in there not great. They're talking about increased pressures on margin, right? When you hear stuff like this, you're probably thinking to yourself, there's better spots to be in there right now, where you think maybe there's just a little bit less risk. It's not bad what they've come up with there, but there's just enough words in there, negative words in there, that I'm thinking to myself, I think I can do probably something better without the risk in there. So yeah, look, it's okay, but yeah, I'm maybe something better out there.
And yeah, definitely, it is a hard space at the moment, isn't it?
Yeah, especially that you hear that interest rates are going to go up again probably on Tuesday, right? Especially when we saw, what was it? The retail sales just go through the roof.
Well, I was saying to you, wasn't I, the other day, how my kids are saying it's absolutely chock-a-block, right?
Oh, I know. So there you go. So retail sales are saying maybe the retail sales are not as bad as some. Maybe it's, again, two-speed economy where some of the retail sales are going well, some are not. Okay. Matter Group, really good update. It is probably the premier small cap that we've got at the moment, I'd say. Really good. I mean, if you're not on this horse, you probably missed out on some really good gains over the last 12, 18 months. So I still think this is, really, Dave, it's a really tough market out there. There's wars going on, there's things, and they're still coming up with 30% growth plus. Yeah, I'll take that. Right? And it reiterated the guidance, which is nice. And there's not much negativity in this right now. I really like this.
Yeah, it's a great sort of nicely profitable wolf. And you know what? There's the opportunity, isn't it? I mean, I think it's going to move with the market, but if it looks like this by maybe if you like the story and you believe the world's not going to collapse in a heap, there's your opportunity on MAD, isn't it? This week, possibly.
Look, it could be one of those stories that holds its ground, right, over this difficult period. So if that's the case, that's why we always try to use the trend lines, because some stocks are not going to collapse like some of the others, right? So that's why I've still got some stocks in my portfolio because they are still holding on very well.
Power.
Mm-hmm.
So this is again was a dividend play.
Mm-hmm.
And are they going to keep their dividend, Wolf? And
yeah, because it looks like it's going to be another decent year for them. So they, again, in the presentation, in the outlook, it looks fairly static, but you got a good dividend out of this. They'd say that the acquisitions that they've made should see growth, but bottom line probably going to be a little bit soft. So I think still you're going to get a good dividend out of it. Is it going to be 9% with 8%, 9%? Probably doesn't matter. It's still going to be a good dividend out of it. So yeah, look, I don't mind this at all. Again.
All right, and not a bad. It's not expensive. Not a bad dividend, is it? Really.
Right.
And the fact that what you're saying, it's a stable dividend. You can't see that dividend.
No. And the sales are very good still, right? So if you just go by the industry sector, very good.
All right. Now, how's the little XRF? Because it's broken trend 4 or 5 weeks ago, so it had to get sold. Unfair, Wolf, or did it just run too hard?
Look, it's a very, very good question. Just chuck in that announcement today, right? Because it's actually quite interesting to see where it's at the moment, whether it is maybe run too hard, too fast, right? So just go right at the bottom, and I think there's a slide on there. No, keep going down. No, actually keep going down. There we go. September report, right there. Okay, so that's the quarterly, right? They're coming up. So you can see that growth, the revenue growth is 8%, and the profit before tax is 15%. So the margins, again, are getting better, right? But is 8% growth enough? And it's trading on 21 times at the moment, right? So this is where, as an investor, you go to yourself, is this too expensive for 8% growth, or are you still happy to pay for this? So I suppose the market's probably said, fair enough, sell it down. But I think maybe we'll find a little bit of support around these levels. So from my point of view, I wouldn't be touching it, but I'd be looking at the first signs of market coming back and liking the story again. I'd probably begin it again because I still think there's growth in this over a long-term period of time.
So again, most probably just a perfect stock to trend, right? You're out below the trend line. As soon as it gets over the trend line, you'd be looking at it.
I think the market got this right.
All right, now let's have a look at ORG because some news today with the Australian Super.
Yes. Well, they come up with the update, talking about how they're performing and so on. Again, remember I said about 1 or 2 weeks ago, I still think that there's a bit more in this where there could be interest for takeovers from others. But I was more interested to see what this company has delivered, especially Octopus Energy. And I think they've bought Shell Energy UK and Germany. So this Octopus is going incredibly well for them. They've got about 20% of it. It's going very, very well for them. This is what possibly it's holding on for their fantastic rise, and investors are holding and saying, look at Octopus Energy, it's worth way more than you are giving us money for, right? For the whole company. So yeah, I'd probably still have a tendency to hold on to this and see where it takes me. See what the next move is by the acquirers.
When you look at Octopus Energy, they've got a 20% interest Origin. So did they take that 20? I suppose it's hard to know, but did they take that 20% with the idea to eventually take over the company?
I think it's too late now. There's probably Octopus Energy is probably worth billions and billions of dollars. This is a problem, right? So I don't know what they're going to do with that 20% out of it. But anyway,
So,
look, I think it's overall, it's the jewel in the crown, possibly.
so what's the, if you look at their market cap, Wolf, what's it worth that?
Org,
So if you,
$15.7 billion, right?
yeah,
Um,
and I'd be interested to see what it's worth. That they're 20% in.
look, I don't think it would be like massive, half the market cap, but at the very least, it is definitely worth a lot of money due to the fact they've only paid probably pittance 3 years ago when they paid for it, or 4 years ago when they paid for it.
And it's listed in the UK as the Octopus Energy.
So let me just have a look. Octopus Energy. Hang on.
Be interesting to see it.
Yeah, look, I'd have to have a look at it and come back to you with that. Maybe we'll talk about it tonight on Ask the Analyst. So there's some incentive for everyone to come back, and I'll have a look at it.
All right. I guess I've nearly got it up here, but that's right. All right, Wolf, we'll have a look at it tonight, and we can. All right, tonight we've got Ask the Analyst live at 7 o'clock. So any questions, be there. But I think the general theme of what we want to talk about today, thank God, there's a little bit of green. Unfortunately, it still could be a mirage, and
yes, we're really excited about it.
So we won't know if it's real till we actually arrive there. Hopefully it's not a mirage, and Wolf, we can see this market recover a little bit. On that note, Wolfie, thank you very, very much. Always brilliant, and thank you very much for giving us a great rundown of today's news. Always brilliant. Well done, Wolfie.
No worries. See you tonight.
Bye bye.